Despite a bounce today, the S&Ps are still likely in a correction. Today's November 21st, and we're going to follow up on what we had anticipated, which was the market would make a high around the 11th of November, and it did. It would go down and have a little bounce Monday and Tuesday this week, and it did. And this little bounce today is still probably part of a B wave or a sideways phase where there's one more down move to complete the correction that we expected. It should end between the 26th and 28th of the month of November, and then we expect a rally to continue into the 9th to the 13th of December as a high point. This is for the swing trader level. And so the next point is that the work that we do, first of all, you should be aware there are multiple cycles that are all there at the same time. And the trick is to know which ones are dominating and what the combination will look like. And what we've seen is that there's a 54-week cycle that's been running. And interestingly enough, it's been repeating exactly upside down. And that basically calls for a decline into Christmas, okay? There's a 49-week cycle that 3 occurrences ago is also repeating. And that one also calls for a low at the end of the year, potentially even early January, okay? So those two are kind of pushing the market down, even though it could conceivably be in a strong uptrend overall. So we have a 80-day cycle, also 80 calendar day cycle, which has been repeating beautifully, and it calls for a low on the 26th or 27th of November. We're not expecting a huge decline. The 5,800 area is strong support. We got to 5,840 something last week. We may take that out. We may not. In any event, it's probably going to be a retest or a double bottom type situation by the end of next week. And then we should see a rally to mid-December. It could make a new high. We were still expecting the 6,150 to 6,200 area, which didn't quite happen. Came close so far. And the low in December also may not be a dramatic thing. A correction does not mean a crash. We're looking at potentially a sideways market until the end of the year. And then the market will make a decision probably to go up strongly in January, which we've been saying for some time. Just want to remind you, we will be having another trade forecast mastery course, and you should see the link below if you're interested. Oh, also, what's interesting is the lunar cycle is also very important, at times more important than others. And lately, the new moon, full moon cycle has been very important in the S&P and also in many other markets. And if so, that is repeating roughly a 4-month cycle, and it's been doing it for some time. That's a famous cycle, by the way. It's discovered years ago. And it's something that oftentimes repeats even short-term swings. Even the day trading level can be repeating on that level at what happened 4 months ago. But that's 4 lunar months. It's not 4 calendar months. The important thing to realize about the work that we do is it's dominated by time. It's Gann's work. Gann talked about time is more important than price. So if we say there's a correction going on, it does not mean necessarily that the lowest price will happen at the end of the correction. It could easily be it goes down, up, and then down and just has a retest of the first low. So when you're trading, the idea is to try to buy the market when it's ready to go somewhere. It can go up and down 5 or 6 times, and the last bottom could be very close to the first bottom, but you've wasted a lot of time in the middle where the market is not going to give you any real profits. If you wait till the end of that developing correction period until it's over, then the market's ready to go up in its next wave up. So the time to us is the critical ingredient, that until after the 26th or 28th of November, you're not interested in going long. It may be the low did come in already. It does not matter in our work if the other one is going to be close, if the other low is retest or conceivably slightly lower.